Welcome. So what is the purpose of these videos? The purpose is to prove that one good trading strategy will appear over and over again in the markets. But to have three that appear over and over again, that's more than anyone can ask for. It's more trading opportunities than you can imagine. Let me continue to prove this to you. Then you can continue to prove it to yourself. And then you will be amazingly successful. Now let's go into the lesson. Let's start by taking a look at Apple again. If you recall, we had this nested divergence that occurred here on the 8-hour. Price went higher, MACD went lower, price went higher yet again from this point overall, even from this point overall, and the MACD went lower. And then we had this big move down. We had nested divergence here, nested bearish MACD divergence here, but then we also had bearish divergence on the daily chart. Now we want to point this out. Remember, we never know if it's going to be a retracement or a reversal. So what condition are we in now? Reversal. Why? Well, let's use the 8-hour to explain this. We had an instance of bearish MACD divergence or trading strategy number one right here. And then it retraced. We had that retracement move. So here was trading strategy number one. Then there was the bearish move that came out of it, the retracement. Price then whipped back the other way and did its continuation, because remember, the majority of the time, MACD divergence, trading strategy number one, is a retracement. But in this case, the nested, it turned into a big time reversal. And the reason we say reversal is, look what happened. MACD went over the center line and now is in a downtrend. That's the key. Where is the MACD in relation to this center line? Here, it stayed above. In this case, here, it stayed above, and then price continued to move higher. Here, when we had this instance, MACD went over the center line. That makes it a reversal. Now, look at the daily. It's kind of hard to see, but if you look closely, that blue line in there is down below this center line. Reversal. How big a trend reversal is this in Apple stock? Price will tell us. Reversal just means a stronger move to the downside. It doesn't mean the collapse of something, because price must go up and down. So that's a really good lesson for us to focus on today as far as the MACD divergence, in this case being bearish, and retracement in comparison to reversals. Now let's do something. The pound dollar has been in a strong uptrend. Is there any MACD divergence or trading strategy number one to show a retracement? On the daily chart, no. On the 8-hour chart, no. On the 2-hour chart, there was. Price was at this level, MACD was here, MACD was significantly lower, price went higher, barely in a spike, but it still meets the criteria. And now price has been slowly grinding just a little bit lower. It's important to keep in mind that when there's a strong trend, divergence occurs in trends. So when we're in an uptrend, we're going to find bearish MACD divergence, right? Because that would be the retracement would be a bearish move. In a downtrend, we're going to find bullish MACD divergence because that would be the retracement setup there. One thing we want to note here, and this is important, is that we've had very little move to the downside here at this point. The retracement is very shallow. And it's instances like this that really teach us to be good traders, because this will help us realize why we should be keeping our protective stops in place in a proper positioning. And perhaps if we have a little bit of money on the table and it's not really moving, maybe reducing our position a little bit. Maybe it's a little bit in profit. Maybe it's even a little bit in loss. But the idea is we're not getting any real deep retracement here at this point. Now, we don't need to be afraid to lose money because there's other times that we make plenty of money. But the Great British Pound has given us a good educational lesson today for trading strategy number 1. Now let's just take a look around at a couple other things. We'll take a look at the Aussie Swiss. Do we see trading strategy number 1? Yes, we do. On the daily chart, price went to this high. Price went a little higher. Doesn't matter, it's still higher. The MACD's lower. So we have an instance of trading strategy number 1 on the Aussie Swiss daily. But we don't have it on any of the other 2 time frames. Let's take a look at the Aussie New Zealand. Nothing on the daily, nothing on the 8 hour, and nothing on the 2 hour. That means we just right away, we leave. We don't see our trading strategy, we leave because we don't want to linger and try and start mirage trading. On the Aussie dollar, price went higher, MACD went lower. There's a valid instance of trading strategy number 1 on the Aussie dollar, but nothing on the 8 hour or the 2 hour. So we could prepare according to the rules that we've taught you to enter the market for entering a trade on the daily chart on the Aussie dollar for trading strategy number 1. And this might be a good point. People go, well, why do you call it trading strategy number 1 so often and not just MACD divergence? Because in our brain, there's compartments. And in the compartment of MACD divergence, if you have any history of trading, there might be all this negativity, there might be loss, and all of these feelings that are attached to giving you internal conflict about learning and or trading MACD divergence. What do? I create a new little box for you. It's called trading strategy number 1. And I don't try to hide behind trading strategy 1, like make it secret, like this is MACD divergence. This is simply the process. I create a new box in your brain. It's called trading strategy number 1. While it might be blended a bit with MACD divergence, essentially it's its own box. And in that, I can help you attach new feelings, new emotions, and new ideas about this trading strategy and you trading it successfully. Why is that important? Because this trading strategy has been around for decades, as we continue to prove to you in the lessons in the course. Decades. There are literally centuries of examples of MACD divergence. Now people go, well, why would you say there's centuries? The MACD hasn't been around for a century, right? But when we say century, I can take 20 years of the S&P 500 and 20 years of gold and 20 years of the Great British Pound and 20 years of Apple and 20 years of IBM and 20 years of oil. And right there, if that was 6, I think it was 6, that's 120 years of market data. So there are decades worth of data where this has repeated itself in the market over and over again. The problem is, you may have read about this on the internet, but never been trained how to trade it correctly. So continue to look around the markets, like the euro dollar. You can see trading strategy number 1 was here on the daily. Earlier in the month of September, it was here on the 8 hour. Nothing recently here on the 2 hour. As you can see from these time frames, especially like the Australian dollar, there are live market opportunities you can take advantage of here. And the other thing that's important to keep in mind is, working with the time frames we have, you don't have to have a crazy heart attack, right? You don't have to go, oh my God, I got to get into my charts. I got to get in my trading account, run into the bathroom at work. You don't have to do any of that insanity. These time frames are like what I call Chicago slow pitch softball. That's like a great sport. It's not the fast softball pitch like you see in girls softball, which is crazy. I don't think I could even hit that ball. Slow pitch softball is a slow, gentle arc that comes across the plate and you can crush it, but the guys who are pitching have good spins on the ball. But the idea is you can see it coming. And with these time frames, you can see it coming, and we can help educate you how to trade this successfully and even find and take advantage of market opportunities that present themselves. We have to remember, with every market opportunity, there's potential for loss as well as the potential for gain. So that's the lesson for today. Some really good points and good reminders. Thanks for spending some time in this lesson with me. So do we have to trade everything, for example, like we looked at today? No, just follow a few things. Following just a few markets using 3 different strategies will keep you focused and free. You will never lack for opportunities in the market knowing all 3 strategies. When we do find a trade opportunity, what do? We prepare for it. How do we prepare for it? How are we going to enter? How are we going to exit? Have we prepared for both sides of the trade? We will never have to do more than answer the questions for those things the rest of our lives. How cool is that? Well, that's going to bring this session to a wrap. But do me a favor and do a lot of other people a favor. Help us change the way the world learns to trade and understand the financial markets. Let's simplify it down to just a few things we need to know to follow to be able to make money and protect our capital. If you haven't already, please visit our Facebook page and give us a like there. Search for our channel on YouTube, Train Your Brain Trading, and watch for the continuous content we continue to put there. Thanks for spending some time in this session with me today. And if you can, promote these materials so that together we can change the way the world trades.